Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. It would appear that the consensus in the market is that inflation is inevitably on the way, and I'm inclined to agree. The question is, what does this mean for Tesla? What impact will it have on the company and the share price? So let's explore some potential scenarios. So firstly, let's talk about what inflation actually is and how it occurs. You've likely heard the simplistic term, too many dollars chasing too fewer goods. And in economics, we always love to refer back to supply and demand. Too many dollars implies too much demand, and too fewer goods implies not enough supply. So with the supply and demand curve, that means prices have to rise. How do we measure inflation? The most commonly used inflation index is the CPI, or Consumer Price Index. This measures the average price for a basket of consumer goods. However, it doesn't factor in inflation of property or other assets. It is somewhat an arbitrary measurement. So anyway, the market is expecting inflation because of such low interest rates and so much quantitative easing or money printing. When interest rates are low, people can afford to borrow more and therefore have more dollars. When the Federal Reserve prints more money, then there are obviously more dollars in the economy. When you factor those two actions in, then we have a lot more dollars chasing the same goods. However, it's the economy that has to boom first. The citizens are still in lockdowns and many businesses are still closed. It hasn't had a real chance to heat up. Things have to go back to normal first. But there are a lot of people who've lost their jobs and businesses that have gone under. It may be what's known as a K-shaped recovery first, until employment picks up. So this could possibly delay inflation initially. Also, some consumers might be fearful about spending money at first and would rather hold on to their savings, in case they may end up needing it. Government will have to fix unemployment any way they can. Unemployed people not only cost the government in welfare, the government also aren't earning anything from them in tax. Also, the more unemployed there are, the more people there are who are upset with the government, who have time on their hands to revolt. This is also the reason governments have been wary of new technologies that can replace jobs. At one stage, the Congo once banned the plough because they were worried a technology like that would replace too many jobs, and the people would revolt. But history has taught us that new technologies actually create more jobs, and there is a shift from legacy industries to new created jobs. However, they require more training and qualifications than simple labourers. So, although I think inflation will come, it might be hard to judge when. However, the chairman of the Federal Reserve, Jerome Powell, says the economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. And he might be right. Powell also used the jobs issue to justify continued large-scale Fed purchases of mortgage-backed securities, $40 billion a month, and Treasury bonds, $80 billion a month. The Congressional Budget Office estimates the federal budget deficit will be $2.4 trillion this year under current law, and the Biden administration's $1.9 trillion spending bill would push it past $4 trillion. Powell essentially said that he'll buy treasuries for as long as the politicians keep issuing them and in whatever quantities are needed to keep rates low. Any way you look at it, this is bound to end up causing inflation when things finally catch up, in my opinion. I guess the real question is when. And don't forget, Alan Greenspan was wrong about property in the global financial crisis in 2007, and look what happened there. If we are likely to see inflation, then the first stage will be an economic boom, which would be kind of good for Tesla, given the fact it would increase demand for their cars, except for the fact Tesla already have enough demand, so this demand could possibly overflow to the competition. It would also increase waiting time until you receive your Tesla order, which would mean that used Teslas hold their value even better, or possibly appreciate. Again, all down to supply and demand. And Tesla aren't the kind of company to take advantage of this and simply raise their prices. They're already doing everything they can to make cars for consumers as fast as possible. However, if consumers have more money, then instead of buying a Model 3, they may opt for a Model S instead, which will give Tesla a lot better profit margin, or perhaps the long-range versions instead of the standard. Or Tesla may simply stop offering the cheaper models for the time being if demand is so high for the higher-priced ones. With all this extra consumer demand, we enter the next stage. Eventually, there'll be shortages. An obvious one will be semiconductors, which we're already seeing in shortage currently. With Tesla being so vertically integrated, they do have better control of their supply chain than other manufacturers, so anything that hurts Tesla will hurt the competition more. Of course, Tesla cars have a much larger margin, and Tesla is a much larger company, so they can outbid the competition for parts anyway. Tesla's main goal is to just get as many cars on the road as possible, to build up their potential robotaxi fleet. As you will continually hear me say, it's all about robotaxis, as everything else is pale in comparison. And there we have it. We arrive at inflation. If automotive OEMs are having to outbid each other for supplies, prices rise. It's that simple. Too many dollars chasing too fewer goods. Of course, the market will react and start producing more necessary items, and they'll have to employ more people to do this. This means unemployment reduces and wages increase. People have more money and want to buy more Teslas. Then there's even more demand for the items, and the prices rise again. Rinse and repeat. We have inflation, and it gets out of control. Tesla end up paying more from all their suppliers and have to give their staff pay rises as a result of inflation, as the staff have a larger opportunity cost, as they can earn more elsewhere, as other businesses want to hire them too. As a result, even Tesla would need to raise the prices of their cars. However, more people can justify the price rise because they're now earning more too. The market isn't the only ones who can see the potential of inflation on the way either. Zach Kirkhorn, the CFO of Tesla, also wanted to hedge inflation, and possibly somewhat cajoled by Elon Musk, hence their purchase of Bitcoin. The theory being it maintains its store of value and it's a better version of gold. So when inflation looks like it's about to get out of control, the Federal Reserve, or reserve banks in any other nation, take control. There are various tools to stop inflation with monetary policies. The most obvious, of course, is rising interest rates, which is where the market is looking with rising bond yield rates. Rising interest rates obviously make money more expensive to borrow, but in addition to that, it also becomes more attractive to invest in money if you are suddenly getting a better yield than in the market or property. So there is less spending in the economy, and thus less dollars chasing goods, which counteracts inflation. The majority of debt consumers have are in their mortgages though, and these are locked in at interest rates for several years, so the main effect of the rising rates is felt gradually as people's mortgages come up for renewal. Banks make the majority of their money from what is known as fractional reserve banking. Basically, it means that for every dollar that is deposited into an account by savers, the banks are able to lend out $10 to borrowers. That's right, they collect interest on $10 when they only have $1. This is why banks make so much money. All the fees they charge are just to cover their overheads. However, the Federal Reserve set the reserve requirements that institutions must hold. For example, they may say instead of being able to lend out $10, they can only lend out $8. This means they must retract their lending. Again, this results in less dollars chasing the same goods, counteracting inflation. The other tool is the opposite of quantitative easing, known as quantitative tightening. This is when the Federal Reserve start retiring some of the debt on their balance sheet. This has never been tried on a massive scale before though. But again, it would have the same effect of less dollars in the economy. So these are the actions the Fed takes when the economy is running too hot. Why? Because eventually it can spiral into hyperinflation. Hyperinflation is when cash turns to trash. This is why when the economic outlook is not so positive, people invest in gold, as any cash they're holding may become worth less or simply worthless. Ludwig von Mises, the famous Austrian economist, said that government is the only agency that can take a perfectly useful commodity like paper, smear it with some ink, and render it absolutely useless. However, the other issue is that if interest rates rise too much, the government are no longer able to service the interest on their debts. In the 1980s, then Federal Reserve Chair Paul Volcker rose rates as high as 17% to break the back of inflation. There is no way that could happen now without a currency collapse. And we've never seen so much quantitative easing and such low rates. This is why I'm holding some Bitcoin myself. I would love to go into what the world would look like if the US dollar went into hyperinflation, but perhaps I'll say that for another time. Let's focus on what will happen to Tesla if the Fed actually managed to control inflation with monetary policy. Historically, after any inflationary period comes a deflationary period, or a recession. Now in a recession, there is a lot less consumer confidence. They're less willing to buy a new Tesla, as they're concerned they may lose their jobs or get a pay cut. Businesses are making less money, there are fewer dollars chasing the same goods, so the reverse happens, hence deflation. Traditionally, booms tend to last around 18 to 24 months, and then they get the craziest before the crash. So this may allow Tesla enough time to complete FSD and start getting Model 2s out. If by the time we reach the deflationary period, Tesla then have their robotaxi network out, it will be the cheapest form of transport available. In recessions, some businesses actually do thrive, the ones that are cheaper alternatives. For example, the no-frills brands. People still need to eat and live, and they opt for cheaper alternatives. Well, imagine if a consumer can sell their car for some much-needed cash, and then save money by using robotaxis as an alternative. It is possible that if the timing is right, Tesla could actually thrive in a recession. Remember, I keep saying robotaxis are where the money's at, but then what does that mean for Tesla sales? Well, people can buy Tesla cars and use them in the robotaxi network. Think of them as like a franchise, assuming they can find the capital to invest in a robotaxi. So, as they keep saying, these are unprecedented times, but I think Tesla should fare better than most. Thanks for listening, please hit the thumbs up, and don't forget to subscribe.